Right, can I welcome you to this virtual meeting of the Teesside Pension Fund Committee? Can I remind all participants that normal rules of procedures apply? For example, comments and questions need to be directed to the chair. As we're meeting virtually, proceedings may take slightly longer, so your patience is appreciated. As per our virtual meeting procedures, if questions are received prior to the meeting, I will call on the relevant member at the appropriate time to raise that question. Invited to speak, please state your name and be specific as possible about which issue you're speaking to. When members of the public can view this meeting via YouTube Live, they'll not be able to actively participate or comment on procedures. As this meeting is being live streamed, can I remind all participants that their conduct should reflect this. So can I welcome you all to this meeting? First item, do we have apologies for absence?
Yes, Chair, apologies from Councillor Furness, Councillor Uddin and Councillor Wright is substituting, and also Peter Fleck. Thanks,
Okay,
Chair.
Thank you. Any declarations of interest? I'm sure we have a few.
Councillor Cooper, Chair. I have a Teesside pension. It's a non-pecuniary.
Thank you.
Councillor Beale, Chair. Can you hear me?
Thank you. I can hear you. Yes, thanks. Thanks, Councillor Beale.
Councillor Beale, likewise.
Thank you.
Councillor Rostron, the same.
Thank you, Councillor Rostrom.
And
Okay.
Brian Folger as well, pension
yes.
member.
Yes, thank you. Any else? No. Right. Next item is minutes of the Teesside Pension Fund Committee on the 17th of June. Are we happy? I hope you've all read them. Are you happy these are a true record of what took place? Can someone propose that?
Councillor Cooper, Chair. Yes, true record.
Yeah, thank you. Are all in favour?
Agreed.
Okay. Nobody against? Fine. Those are adopted. Right. Item 4, draft annual pension fund reports and accounts, and I shall put this in the general direction of Nick.
Thank you, Chair. This item is to present members with the 1920 draft annual report and accounts for the Teesside Pension Fund, and it's to ask members to note the report and obviously to make any comments they wish to make. The terms of reference for the Teesside Pension Fund require the annual reports to be received by members, and so we've attached a copy. As I say, it is draft, so there were maybe some changes. Obviously, this is pretty much what we expect it to be. The format won't change very much and the numbers are hopefully correct, but there might be some tinkering around the edges. The performance summary that I've given in the report, basically there was significant volatility in markets in 1920, with initial increases towards the start of the year eclipsed by a large drop in global financial markets towards the end of the year as a consequence of the COVID-19 pandemic and concerns about its financial impact. So it's pretty much that event that has dominated the year effectively and the financial outcome for the pension fund. And domestic issues such as which had previously seemed very significant, such as the 2019 general election or the UK leaving the European Union on the 31st of January 2020, were overshadowed by the impact of the pandemic. And similarly, global issues such as US-China trade negotiations and the nature of the eventual trading relationship between the UK and the EU were also put to one side as the focus quickly moved to the impact of the pandemic on economies, industries, trade and growth. And the pension fund was particularly affected because it is currently overweight in equities, and equities saw a dramatic and sudden fall towards the end of the year. So the financial performance of the fund for the year was negative. The fund's value fell to 3.74-ish billion, a decrease over the year of approximately £350 million. And that drop in value overshadowed a little bit the very positive outcome of the latest valuation of the fund, which is set out in the report as well. Every 3 years, members will be aware the fund is valued by the actuary, and the valuation this time round was done as at the 31st of March 2019, and the report itself was published on the 31st of March this year, the final report. And that report showed that the funding level of the scheme had improved from 100% at the previous valuation to 115%, which is obviously very pleasing, and is the third sort of report in a row where we've been able to declare the scheme as fully funded. However, as I say, the actuary did have to consider whether the report should be amended in any way because of the drop in markets caused by the COVID-19 pandemic, and the actuary decided it was still appropriate to issue the report as it was, and still appropriate to adjust employer contributions in the way that they have been done. And effectively, that's because we are a long-term investor. We're a long-term. We hold our assets for a long time. We're not required to sell the equities that have dropped in value, and we anticipate that over time the value will recover. The other points to note in the report: membership of the fund continues to increase, and not in any particularly dramatic way, but there has been an increase, and the overall membership stood at 71,500 at the end of the year, and there's increases in every category of membership, and that is interesting. Although over time the fund is progressively maturing as we have more pensioners in relation to active members. That's pretty much all I wanted to pull out from the report. Obviously, the report is there; it's in its entirety. If members have any questions or want to comment on any aspect of it, I'd be quite happy to take those questions.
Okay. Does anybody have any questions on the report? No. Well, I think we all appreciate what did happen with the COVID virus. I think we all appreciate that the market is so volatile. But as it was reported on the board of the coast, looking at the long term, people believe that the markets are sound. So we have the appropriate money there, and I think that basically the pension fund will be able to survive this without any problems at all.
Chair,
Yes.
sorry, I'm having difficulty learning these controls.
Okay.
It's not a question. I think I'd just like to say thank you for the report. It's a very full report, and it does reflect what we've seen during that year in question. It's just on page, whatever it is, page. It's difficult because I've got a double print on mine. It's on the committee meetings. I looked and I thought, have I only been to one meeting this year? But then I read there's 2 meetings missing, Chair. If I'm believing my diary, we had a meeting on the 24th of July and a meeting on the 22nd of January in this time period. And I know I was at those 2 meetings because it's in my diary.
Right. I'm just looking down.
I'm sure somebody could check after the meeting before it goes to full publication and put in additional columns if necessary.
Yes, yes, I'm looking at it now. Yes, it was unusual for you to miss any meetings, Jim.
Oh no! I did have an operation.
I know you
in
did.
That year,
I'm aware of that.
And I know that I was missing. But there's another 2 meetings that I, for some reason, I don't know why we had another 2 meetings, but I'm sure the 24th of July,
which was the
and
AGM.
the 22nd. Right, yeah. But does that not count as a meeting?
Yes, it does. Yes.
Yeah, and the 22nd of January, I have one in my diary this year.
Yeah. I shall refer that to Sue.
I'm sure it can be sorted, Chair. It's not a big issue. Just I thought how stark it looked in my absences.
Yeah.
Chair, can I pick that up?
Yes, please go on.
Yeah, thanks for that, Councillor Beale. We'll look into that, and I'll make sure I work with the committee secretary to make sure we get the correct attendance reflected.
Yep. Fine. Any other questions for that? Otherwise, are you happy with that, Nick?
Yep.
Right. We could then move on to item 5, which is the audit planned report. And I'll pass it back to you again, Nick.
I believe we have got somebody from external audit, Mark from external audit,
Mark, right, okay.
to pick this one up.
Yeah, Mark, can you take this up?
Yes, certainly. So this is our report. So members may remember that we previously presented our audit planning report for this year's audit of the pension fund. That report was kind of prepared before COVID-19 kind of really had an impact. I think from memory we presented it in early March, certainly to the audit committee. I can't remember the exact time of the pensions committee. So this is really just an update on how COVID-19 has impacted our risk assessment and kind of the extra response we're building into our audit as a result of that. So if I quickly run through onto page 4 of our report, just a reminder for members that obviously financial instruments and other assets held by the fund are disaggregated into tiers in the fair value hierarchy under accounting standards. So that's level 1, 2, and 3. Briefly, level 1 is effectively it's a quoted price, so publicly traded equities, for example. Level 2 is not a directly quoted price, but it's largely derived from them. And then level 3, where there's largely kind of information which is not publicly kind of traded, referenced, available to support valuation. So that's infrastructure, private equity, property, things like that often fall into that category. So as a result of the increased uncertainty around the year end, obviously trading in certain types of assets kind of decreased in volume. The price information available became less. So as a result, we're expecting to see some movement of things which might have been level 2 previously into level 3 this year. And there's also additional challenge around actually what information is available to support the valuation of those level 3 investments, given that they're already the harder ones to value, and now you've got the additional uncertainty of COVID-19 layered on top of that. So we previously reported we had a significant risk around the valuation of unquoted pooled investment vehicles. That's obviously still the case. But on top of the things that we previously said we do, which was summarised here on this slide, we're also inquiring of Nick and his team kind of what challenge the pension fund has given to the individual investment managers around how they've considered the impact of COVID-19 on their assets. What have they done to kind of build in the impact on that? Now, obviously, you've seen the decrease in valuation of assets in the accounts, which suggests that that has happened. So we've just asked the question to understand exactly how that challenge was provided. We will then do a targeted response, kind of picking up on that process, doing some kind of review of the methodology used and kind of an overall assessment of, do we think the accounts adequately address COVID-19 impact on asset valuations? The other area I want to highlight is around directly held property. So pension fund has a number of properties that it holds directly. We've previously reported that this is a significant risk for us. What we've had since the year end is the fund has received the valuation report from the external property valuer, in line with what we're seeing in pretty much every other valuation provider at the 31st of March. That report was provided on the basis of a material valuation uncertainty. So it's effectively a caveat around uncertainty within the valuer's valuation. Now, that's not to say that the valuer doesn't think the valuation is appropriate. Their report does say that, it is still their best available guess of the valuation, but it's that increased uncertainty there. So from our perspective, we'd be expecting to see disclosures within the accounts around that uncertainty and kind of highlighting it for the readers. And our opinion is likely to include what we call an emphasis of matter paragraph highlighting those disclosures. So that's not a qualification, but it's basically, we think the uncertainty is sufficiently worth highlighting that in our opinion. So we will just pinpoint towards the disclosures in the accounts which talk about that disclosure. In addition, we have asked our EY real estate property experts to look at a number of assets. We were planning to use them anyway, but what we've done is we have focused that assessment around which assets they are looking at those that have characteristics more likely to be impacted in terms of valuation by COVID-19. So, for example, where the tenants are, say, a travel company, or high street retail assets, which are more likely to be impacted than, say, industrial properties. So those are kind of an update to a couple of our significant risks. On page 7, we've just highlighted a couple of other areas where COVID-19 will flow through, but we haven't changed our risk assessment. So the main one for us is around going concern and post-balance sheet disclosures. Now, given the nature of a pension fund, we don't have any real concerns about the going concern of the fund. I think that's very key for me to stress. But we do think there's a little extra disclosure to be made in the accounts this year, kind of looking at, for example, have you considered what happens if certain employers don't pay contributions, the level of payments expected over the next 12 to 18 months? Does the fund have enough cash available to kind of meet those if there is a drop-off in contributions kind of thing? So we'd be looking for some narrative in the accounts this year around that assessment, which we will obviously then kind of audit and tie back to supporting information. And also just to highlight that in response to the COVID-19 impact on financial statements, across all financial statements, we've introduced new kind of internal review and challenge processes at our end. So that's just a kind of to reassure the committee that we have extra steps in place to kind of ensure the robustness of our audit procedures in light of COVID-19's impact, particularly on assets and the likes that the pension fund holds. Final thing I just want to highlight is our materiality level. So we previously reported that we set our materiality at 1% of net assets. So materiality essentially being, the level at which a misstatement would be deemed to influence the decisions of users of the accounts. Given the decrease in fund asset value since we set our materiality, we have revised that calculation. So we have considered whether 1% is still an appropriate threshold, and we're comfortable that it is. But obviously there is a lower net asset base, so we're applying that 1% to. So our materiality has decreased from the 40.8 million presented in our planning report to we have now set at 37.4 million. And that's 1% of the asset value you'll see in the draft accounts included in the papers for this meeting. Our performance materiality likewise has been scaled down. It's 75% of our materiality threshold. That hasn't changed. Again, we've reconsidered whether that should change, and we're happy that it doesn't. Fundamentally the risk assessment in terms of what drives that level of our performance materiality is the same, but we've reduced it down to reflect the lower value. And we've also slightly decreased our audit differences threshold, which is the threshold at which we will report errors to the committee from 2 million to 1.9. And that, again, that's just a proportional decrease. So I'm happy to take any questions that the members have on that report.
I don't see any hands raised or anything. Well, the only comment I would make is that obviously it was done at an awkward point of the year when the COVID virus happens. Obviously the economy is going to start to recover. We just have to keep an eye on things and just hope that the economy does get better. I understand what you say about things where properties, where you have travel agents, etc. But we do have things like shopping centres and things like that. So we do have property across the board. So I think we're well covered when it comes to that. No other questions? It's going to be a quick meeting, this one. So if everybody's happy with that, we'd actually look at the report itself at the end, which we've looked at. At all? Come on, Jim, you must have a question.
Councillor Cooper, Chair, can I just ask something?
Yes, please go ahead.
I was following all the paperwork on the computer. For some reason, I've lost the paperwork, so I'm just going off memory here. There was a page, it was either 46 or 48 of 94, something like that, and it talked about thresholds, and it showed us below our thresholds. I'm just wondering if we could have a short comment from somebody on that. I'm sure we're going to pull it all right eventually, but I'm wondering if you could pick it up from your paperwork, because as I say, I can't access this paperwork now for some reason.
Just looking at 46.
It was a list of all the assets and the percentages, and then it talked about threshold levels, and where the threshold on one thing was 6.6, we were showing 6.4, and it mentioned being below the thresholds.
A lot of them is because the weighted equities, etc. A lot of the things we if you take the benchmark and you look at what we do, you take the benchmark. We've quite often been away from the benchmark. It's just the way that we've always run the pension fund, which is great when equities go up. It's not so good when equities come down. But over the long term, it's proved a lot better. I don't know whether Nick wants to comment on that.
Yeah, thank you, Chair. I think what's been referred to is about performance within the fund, probably. I can't find any reference to thresholds within the report, but there is reference to performance. So, for example, where are we? The fund return for UK equities, over 10 years has been 7.4%. The benchmark has been 4.4%. So we've got an excess of 3.1%. So that shows over 10 years in UK equities have done really, really well.
Yeah.
Obviously, that's not the case for every single asset class. And really what we're trying to do there is show, I think this is on page 50 of the, is it page 50? It's hard to tell, 48 of 96.
48, yeah.
What we're trying to show is how the fund has performed against its various benchmarks. So what we do is when we invest assets, we try and make sure that we compare ourselves with a suitable benchmark for each asset class, and that's just showing how we've got on over each period: 1 year, 3 year, 5 years, and 10 years. So that's the and basically what we're saying in 1920 we achieved a return of 5.8% compared to our benchmark of 6.6%. So we did underperform slightly in that year, the overall fund, but it's important when we're looking at our investments to look at a longer time period, because we are long-term investors, and to understand reasons why we might deviate from our benchmark as well.
Thank you for that.
Yeah, I think we have discussed in the past that the Teesside Pension Fund has, over the last certainly 18 years or so, deviated from what we call the standard norm, if you like. We're overweight in certain areas. A lot of pension funds have gilts and things like that, which have not very good returns, but are fairly stable, if you like. So it's just the way we run the fund, which is why, hopefully, why we've been successful. You do get caught out when equities go down, but it's also an opportunity of buying time. Any other questions on that?
Chair, Councillor Bill, yeah.
Yes.
Yeah, it's back to the audit report.
Okay.
Because I thought that we're on. I may have not seen it in the small print, but because it literally is small print. Could I ask about the cost, the impact of COVID on the cost of doing the audit, if any?
Who wants to take that up?
I'll answer that one, Chair. Yes, so in terms of that, we are incurring extra cost for us in doing it, in terms of we are doing additional procedures to respond to kind of the increased risks this year. We will be having a conversation with management at the end of the audit when we kind of, we finish that process and we know the full extent of that around kind of what that means for our audit fee and kind of recovery of that cost. So yes, there will be an extra cost we expect. We need to have a discussion with management around the size of that once we finish the work. So I can't provide any numbers at this stage.
Okay. You happy with that, Councillor Beale?
Well, I'm sure. Well, I would hope that they're reasonable, and I'm sure they will reflect the additional work that's gone in. I just wondered whether even if there was like a ballpark figure or a range figure of, are we talking about an increase of 100%, 200%, 5%? Just roughly a rough ballpark figure that I won't hold them to account for and put the feet over hot coals over.
At this stage, it's quite difficult to say because a lot of our procedures are still being scoped out. For example, we're still waiting to hear the details of kind of how management have challenged the investment managers, which will then impact the extent of which we have to kind of do additional procedures. The more robust management's challenge has been, the more we can kind of rely on that, and the less additional work we have to do ourselves. So I appreciate why you kind of would like a number to it, but at this stage, I think anything I would say to you would probably be misleading, so I'd rather not.
Okay, thank you. Anybody else, any comments on that? If not, if we're happy with that and the subsequent report, Nick, do you have any other comments to make regarding that?
What, regarding the audit fee?
No. Yes, about the audit fee. Yes.
No, other than to say that, as it says in the report, that the EY will agree any changes with management and report back to the audit committee. So members will find out once that discussion's complete, I guess.
Yep, that's fine. No other questions regarding the report? If people are happy with the report, just it's fine and can be adopted. Okay. Fine. Well, in that case, the audit report is there. I'm not aware of any other business. Do you have anything to bring to the meeting, Nick?
No extra business, Chair, no.
No. In that case, has anybody got any questions or queries at all for the meeting? In that case, thank you very much for attending. The AGMs are not very long and like our normal other meetings. Some people say, can't you have them all like this? But thank you for your attendance, and we'll see you hopefully all in the September meeting. Thank you.
Thank you, Chair.
Thank you.
Thank you, Chair.